Good morning, everyone. How is everybody? Richard, how are you? Gary, Tony, Robert's here. Good morning. Hey, Ann. Glad to be back. Thanks, Ralph. It is Friday. So we're at 11, and we'll be getting started here shortly. Hey, Robert, good morning. Thanks, Brandon. Yeah, I was here as an attendee, but I was driving. But I was listening. Thanks, Petro. Randy, how are you? It could be my microphone. Yeah, somebody said my volume was a little low, but I think I was just kind of angled wrong. Hey, Kirk. Good morning.
Oh, let me take my jacket off for this. I forgot to open the room yesterday till 5 minutes
Oh,
before
man.
Matt. Good morning, everyone. We got a lot of folks here. We got Robert, Sylvia, Brendan. We got Bruce, Petro. We got Matt. We got David. We got Terry. We got BB. We got Chaz. We got John. We got Eric. Robert, Tony, Tara, Robert, Scott, Cyrus. Good morning, everyone. Hope everyone is doing great. Hope everybody's doing well. I can't believe it's Friday. Oh man, honestly, can't believe it's Friday. This market is something. Don't have a lot of confidence in this rally. That's why I'm not holding a lot of trades right now. We just have one trade in the trading pit. I'm not going to get into the name because some of you may know about it. Howard, how are you? Richard, how are you? We'll be starting in about 3 minutes. Wanted to when a contract support, how long does it take to get a contact support? I don't know about
Yeah.
about support. You can if you contact me, I'll reach out right away. Support depends how busy they are. Ah, and Puerto Vallarta is beautiful, especially right now. It should be absolutely gorgeous this time of year. Ken, how are you? So good to see you. So good to see you. Man, this market is something right now. It's got a strong rally, but very tight. Let me Dr. Serena, how are you? That's why I said, Gary, we got to be very, very careful today. We got option expiration. We got to be really, really careful. Sometimes when I don't give you guys a lot of trades in the pit, it's not because I'm lazy or I'm not focused. It's because I'm watching out for you guys. Um, let's where am I? I'm all over the place. So one thing that's encouraging is the bond market. The bond market started rallying shortly thereafter. That's what gave the stock market a nice little boost. The S&P right now, oops, how did this get up here? Put this back here. So as you can see, the S&P. So there's a couple of things. The S&P is going higher. It looks like we're going to hit the swing high right here, which would be fantastic. It would bring a bunch of liquidity in. I like how this rally's going, but again, this is the part that I want you guys to understand. And this is the important part. Look at the size of these candles. Notice they're not like this. They're not like this. They're not like this. They're very, very small, and they trample each other. Whenever you have uh thank you, Robert. Thank you. Yeah, I'm not very lazy. So anyway, you see this? It's very tight, very, very tight. When I see that, that's telling me that the market participants are extremely cautious. And they have good reasons to be cautious. We're at a very important level. We could be at another turning point like we had right here. Remember? Got stopped right here. We could be setting ourselves up for another one of those right here. although it doesn't feel like it, but you know how feelings go because we did make a higher high right here than this and a higher high than this, and momentum seems to be pretty good. But again, look at how small these candles are. That means market participants are very, very nervous. They're not really happy about what we're seeing right now in the market. This is not great. So not loving the bond market. I'm not loving the trading action. I'm taking very small positions in the pit, as you guys could see. We're not playing heroes. We scratched T-Mobile this morning, like right at our entry price. Didn't really do any good or anything bad there. Um, volume today. Let's take a quick look at volume. Volume should be okay because it's option expiration day. But let me take a quick look. Let me just put this back here. I got to stay organized. If I don't stay organized, nothing good's going to happen. But I know that folks in this room have been making good money because I've been giving you guys some good recommendations to the long side lately. And a lot of those stocks are semiconductor, tech, and chip stocks like yesterday. That's good, Betty. Good, good, good. Okay. I don't know why I'm on this screen instead of this screen. Go back here. Okay, so let's look at volume on the SPY. So far, the volume is, it's about 17 million. I mean, it is on the lower end. Yesterday was good volume, real good volume. We had 91 million, but it's still a little early. I don't really usually gauge volume till about 12:1. I want to see this go to about 30 million by about noon, maybe 1 o'clock. That would be ideal. That would be really what I would want to see. But the market is moving higher. It is moving in the right direction. It's giving us a good trend. There's a lot of stops around this level right here. A lot of stops. So it'll be interesting to see how we eat through those stops. But again, this is making me very nervous because this is not showing me a big commitment. I want to see bars get wide. I want to see 3 or 4 bull bars right here, like this. I want to see big bars like that. This is very wimpy buying action. And then when you see wimpy buying action, it's very easy for sellers to come in, slap the hell out of them, and bring them down. Taking profit on Apple, okay. All right. Is that what you're doing, Angie? Taking profit on Apple? Okay. I think it's got a little more upside. I mean, look, it's breaking above the 50-day moving average. It's got a gap here. Looks pretty good from where I'm sitting. But again, I'm not a fortune teller. It is the second biggest stock in the world. I mean, it's not looking bad. I'm just telling you what I'm seeing right now. Not really seeing it a great time to take profit on. It's kind of just sitting and waiting, if you ask me. Okay. So, let's see how that stock T-Mobile's doing. Ooh, it actually went up a little bit. If you didn't listen to me, you could have actually made a little bit of money on it. Nothing crazy, but a little bit. Okay. So the first thing I wanted to really talk to you guys about was earnings. Earnings. So far we've had about 40 stocks come out in the S&P. 86% have beaten EPS, 55 have beaten revenue. That is not fantastic. The fact that that only 55 have beaten revenue is not a great sign. Index revenue growth deceleration right here relative to what we've seen in the group before. For the tech so far, the numbers are looking good, but they're not looking amazing. They're not looking nearly as good as what we're seeing from the market, which causes me to be very nervous about the whole thing. Very, very, very nervous about the whole thing. So got to be really careful over there. Got to be really, really careful over there. Okay. So as of right now, we're looking at problem is I don't have the full estimates yet. I need to have at least 50 members come out before I give you guys estimates. So far things are looking okay. They're not looking great. Yeah, just about, Chaz. Right about there. Yeah. There you go, Edward. So not as excited about earnings as I was, but I don't have the full picture yet. That's the big problem. So now let's talk a little bit about stocks that we like. I gave you, by the way, I don't know if you guys are watching my morning video. I know about 120 of you showed up there this morning. I gave you some stocks. A lot of those stocks are rocking and rolling this morning. Wow, look at that. Look at Stephanie. That's nice. Good for you, Stephanie. Very nice. Eh, Post that right here. There you go. Wow, look at Gary. Go ahead and repost that, Matt. Grab all those goodies. Okay. So first things first. Microsoft. Microsoft. Here, I'll
I
repost.
got it.
You can repost. Yeah, Gary. Look at that. Yeah, you guys post your winners. Microsoft. Microsoft. How original of me, right? Roger just picks Microsoft and Apple and Intel all the time. No, Microsoft is looking good. It looks like it's swinging the heights. It is now the biggest company in the world. The stock is looking good. I would put a stop right at the 8-day moving average, right around the 385 level. I like how the intraday is looking too. It's looking really, really sexy here. This is very nice. I like this. Nothing wrong with that at all. Um, put a option chain for you guys. 14 days out. Let's go 390 strike price. 390 right here. You're going to pay for these options, but it's not bad. And I really like how Microsoft is looking. Next one is GWRE. Look at this stock. It's a little choppy, but it's got a good trend. It's breaking up higher. It's got a nice Hakanashi. I like this. I really do like this. I like how this is looking. Uh, Options are very, very wide on this. The stop loss will be right below this candle right here, but you're going to have to take one for the team and buy the stock. The options are very illiquid here. They don't have good liquidity at all. At all. Yeah, markets are very look at Ann. Look at you, Ann. Looks like you've been listening to Uncle Roger. That's good. Do I have a tutorial on how to set trailing stop orders in TOS? No, because I don't use trailing stop orders, John. Why would I have a tutorial on something I don't do? All right, let's continue. Next one is Qualcomm. Qualcomm. Let's go to Qualcomm. I like the stock a lot. I almost gave it to you guys this morning, but I didn't want to get too chip heavy. I like how the stock is looking. I would put a stop loss right here in the range. So if it goes back in this range, it would be done. It would be about 144. About 14 days to go. You'd want to go to the 147 strike price right here. 147. Nice. Look at you, Stephanie. Look at you cleaning up the house. Let me just get that real quick. Okay. All the stocks I've been giving you guys have been making money, actually, believe it or not. It's been miraculous. CRM, it's up, doing well. Very, very well intraday. Like really, really well intraday here. I would put a stop loss right here below this pivot at 262.36. That would be the pivot level. Leslie, I'll talk about that a little bit later. Let me just put it on my list. Okay, X. You're welcome, Stephanie. You like my dashboard, huh? It's pretty good stuff. Get that here. It does work like magic. Here, Stephanie, you can post this for everybody. They all want to see what you're writing. So there it is. These are nice things. You could share this with everybody. It's good. Okay. CRM options. Have you guys been making money aside from Stephanie on all of the positions I've been talking about all week long here that have been moving our way, like DDOG, Visa, all the. You guys are doing it. Let me know. Oh, good, Nil. You took my Tesla advice. Good, 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 good. Good, good, good. Took two winners yesterday in the trading pit. Ooh, look at you. You guys don't want to share. That's what it is. You don't want to share. I've learned that about you guys. Look at you, Omar. I guess you guys are just listening carefully and not interrupting me. Okay, I better stop. Okay, I guess you guys have been listening to me. That makes me happy. Because what's the point of me doing this if nobody listens to what I say? You know? ACN. I like this stock. I really like this stock. Stop loss would be right below the support level at 349. The options would be, look at you, Gary. Didn't I give you guys calls for CRM or did I skip it? If you guys want calls for CRM, it's right here. Two 270 strike price right here. 14 days out. 270 strike price. Oh, only been trading for 20 years. Yeah, I love the dashboard. Took me 30 years to put it together, but yeah. Up nice on Texas Instrument. Nice. Nice. I'll tell you guys something between you and I'm feeling this week already. I'm tired. I'm tired. Like it's I could feel it. And when I'm not tired. I want to be in the right state of mind so I can give you guys the best trade. So I'm a little off today. Um, MasterCard. MasterCard is the next one. How do you get the dashboard? You reach out to customer service, John. Uh, MasterCard right here. Right there. 424.15 stop loss. 14 days out, you would go to the 425. It's spready. Ooh, it's spready. I'm surprised. I'm pretty surprised that it's so spready, but it is what it is. Yeah, I'm going to give you ACN. Sorry, I'm a little out of it today. All right, right here is our stop and our profit. Our options would be at 352.50. 352.50. Right there. 352.50. All right. Next one is this one. This was my top alpha stock. I got out a little bit too early, just a hair too early. Thank you, Gary. That's very nice of you. Very, very nice of you. You guys are fantastic. Yeah. Huh, good. Okay. The options would be there. What? These are also really spready. Let's see, 180. Yeah, you could do the 180s. These are okay right here. 180s. You're paying about a buck out of the money for them. It's not that bad. Not that bad at all. Okay. Um, Next one is AKAM. We haven't seen this one in a while, right? Remember like a year ago, we were all over this? We were like all over this stock. The stop loss will be right here, 116.91. This stock is a very smooth stock. It doesn't have those chops. It's not as choppy, which makes it easier to trade. Okay. Just FYI. Um, we would go 28 days out. And we would go, hell, I'd go right here to 110. The next one is ABBV. Uh, I'm actually looking to possibly day trade the stock today if it pulls back a little bit. I really like the stock a lot. I would put a stop loss right here at 159.12. That's what I would do. And we would go to the 155 strike price. 1 second. Next one is Guild. I like the stock. Put a stop loss right here. This is this and the one at AbbVie and Guild are my two favorite stocks today for day trading right now. Just FYI. In this moment, this second. 8507 is a stop loss. I would go with the 84 strike price right here. It's not that expensive. Nice. Nice. Oh, you guys are great. So far, Adam, so far most are 14 days unless there isn't a 14-day option out right now. Okay. RSG. I like this, but I would wait. It may come down. I'd like to see it closer to the moving average. So I would probably hold on that. I wouldn't do much over there. I would just hold off there. Richie says, should we wait to get into these recommendations? End of the day, if you're swing trading, I would wait to see how well it's holding up, unless the stock right now is doing this intraday. Like Guild right now. See Guild, see how it's doing right now? That's a strong stock. So you could day trade the stock too, because look at how strong it is intraday, and or you could swing it. But most of them end of day, last half hour. Andre says, do you ever um, should we wait? Oh, sorry. Andre says, do you ever sell options on shares you own? No, I don't do covered calls. Andre, I don't know if you know this or not. You got to have to think about it a little bit. But selling naked puts and covered calls have the exact same risk reward profile. Just FYI. Brooke says, are you going to do a master class on the new update of the data miner? I can't get best. Yeah, we are. We are next week. I just need to see if they've already scheduled a date. 1 second. Let me see. 1 second. Let me just check. I told you guys that the data miner software is going to be out. It took all this time to get testing and all of that done. No, they haven't put it on my web. They haven't put it here yet. Oh, yeah, they did. Yeah, they did. It's happening. So here, put this on your calendar. It's happening Monday, the 29th at 1 p.m. Okay, guys? Monday, the 29th at 1 p.m. That's when it's happening. Yeah, you could get Data Miner for purchase. Yes, Data Miner School. And the new version's out. The one we spent a fortune having programmers develop. But it is still available. It is still available. Okay, let me continue. Look at this stock. Now, if to be very honest with you, I've never traded, or if I have traded the stock, I don't remember it, but it came up on my board, and look at this beauty. Nice breakout here. Nice consolidation after a long trend. Probably the options are illiquid. I'll check right now. Yep, they're horrible. They're terrible. Wouldn't do it. But again, it's my job. A lot of you, I know you guys don't know this or not, but a lot of you guys are actually trading uh stocks, which is great. Wayne says, what is the link to the data miner program? I don't know, but let me get it for you. If anybody wants the data miner software, send me an email and I'll forward it So you guys will get a good price. Roger at rogerscott.com. The data miner is what we use to find stealth surges. Stealth surges have a profit factor. I think the options like 2.2, the stocks 1.5, which is a really good profit factor. It's a great solid program. That's how we do seasonality. I've made more money this week with GM. Oh, so good to hear that, Robert. Wow. Robert, I'm going to post that for everybody because there's nothing really private there. There's no like real numbers there. So I'm just going to repost that. I hope you don't mind. But thank you, thank you, thank you. So yeah, it's there for seasonality. That's how Matt does seasonality. He uses the data miner software. He'll probably be hosting that session on Monday too because he's really good with that program. Are all the stocks you tell us from the S&P? Not all, Charles. Maybe 85%. What would you guys say, guys who've been with me for a long time? What would you say? 80%, 90%, somewhere around there? 85. Richie says 80. Yeah, about 85. 85. Yeah, that's what I'm thinking about 85%. I don't like it's not a conscious or an intentional thing I'm doing. It just happens to be the case. But I also talk about something like D-Dog and there's some that I talk about because my stock fetcher doesn't screen just S&P 500. Yeah, or if you guys want, post your email here, and I have customer service right on my hotline right here. I'll posting it for them. So just if you guys are interested in the new data miner that just came out, the updated version, let us know. Can you get a list of the stocks? Here, let me give you a list. I'm in a good mood today. I'll give you a list. Microsoft, Qualcomm, Meta, CRM, ACN, MA, AKM, RSG, but I'm not done yet. It's not RASG, it's RSG, RSG, which um, TW, another one. Not as beautiful because it's choppy, but it doesn't look bad. I would put my stop right here. It's good for you guys to see this because then you could see which ones are not as clean looking. I like clean stocks. This is a little choppy. Remember that stock NVO, one of the four losers we took in the trading pit? It was choppy. 93.53. It's very spready. Oh, not very spready, but a little spready. Here, 95 strike. Yeah, thank you, Adam. I'll post it. They just literally uploaded the new version 2 days ago. Well, more than that, 2 weeks ago, but they've been testing it to make sure it doesn't take our website down. This one is cool because you can press a button and it gives you the top 10, bottom 10, all that stuff, which is really cool. I like that a lot. Um, now. Oh yeah, PayX. Somebody asked me about PayX. That's the stock I gave you guys as a gap stock, and it looks like it's about to start. It looks like it's about to enter the gap. The gap is at 122.28. It looks great, but it's not. It hasn't triggered yet. Or actually, wait a minute. It has triggered. It has triggered. Excuse me. Wait, it's this area right here. Let's see. No, almost. Like it needs another like a few cents and it'll trigger. But I'll give you the option for that one since you guys are here. I would put my stop. I would put my stop right here. Right there. My profit target is right there. And the option would be it's very right here, the 120. Get that one. Look at you, Gary. You frisky rascal taking those gap trades on the down low. And remember, I like gaps that gap and sit like this for a while, build a base, and then start filling up. Kind of like Apple's doing right now. Kind of a little sloppy here, but you guys see what I'm talking about. I like stocks that fill the gap a lot. And Apple's also the 50-day moving average happen here. Let me put it right here. The 50-day moving average happens to be right here. We're crossing the 50-day, which is nice. Did I give a stop price on Guild? Let me pull up Guild again. I haven't done my short list yet, so give me a second. I stop on Guild would be right here. 85. I like Guild for a day trade. I really like it a lot. I'm just tired. It's been a long week. I've been very focused. Okay. And by the way, in half an hour in this room, we're going to have the last of the gap to green, and then we're going to be closing it down. That's it after that. So Raleigh and Matt will be jumping in here in a few minutes, and I'm going to go have my lunch. Here's the short side. APPN. Matt, you missed everything. We're getting some really good. Too much on the screen. Can you please give verbally? Verbally. What are we talking about, Murmus? Verbally. I don't know what we're specifically talking about. Yeah, I'll tell you the stop loss. What symbol did you want the stop loss for? Give me the ticker symbol, Murmus, and I'll give you the stop loss. Oh, we're good for now. Okay. Okay. So APPN, we see that here. Thank you, Matt. We would put a stop loss right at the moving average, right around the 33.50. This thing looks like it wants to break down. Look at this. Looks like it wants to continue breaking. I would put remember, these are puts now. These are not calls. We would go 28 days out, and we would go 35 right here. It's not expensive. It's pretty good. Not the worst idea to have some shorts right now. I'm telling you. Remember Humana? Oh, Matt, you missed some quotes yesterday. People made Humana gapped down 50 points on the put.
Oh, wow.
So a lot of people made a lot of money yesterday.
Good.
Like a lot of money yesterday. Like 17,000, like 15,000%, like really good money. Yeah, yeah. You always miss the good stuff, Matt. You always miss the good stuff. Okay. That's the first one. Next one, Baba, China. You guys remember I've been talking a lot of smack about China. It is what it is, Ann, you know? I've been very long. Yeah, I've been very long. Brooke says I made 10 times on Humana. There you go. Brooke, I take it that you're enjoying this program. So, yeah, Baba. A stop loss would be right here at this gap at 70. And we would go right here at about 70 put. You're not paying too much for that. This morning, long. Yes. This morning we went long. Hesitantly. Yes, I went live this morning. Yes. I went live. It's recorded. It's in the members area. And I gave you tons of stocks that are doing well right now. And then last one, I gave you this one yesterday. Again, today. Remember what I told you? Solar stocks. It may be time. It may be time. Matter of fact. I may want to put this one in. I'm going to be looking at this one. I really like how it's looking. I really like how it's looking. This is my favorite short for today. And I would be looking at the 70 puts right here. Right here. I like this put. Got support right here. That's 60. Below 63. It's got till about 63. And this thing can really move. And think about it. If this market hiccups right now. All right. That is all I have for you guys. Did you give the trade for Baba? Didn't I give you guys a trade for Baba? Here, Baba. Stop loss right here at 70.97 and a 14-day put. 70 strike price right here. Yeah, I did. I think they're going to be doing it monthly, Ed. Monthly. All right. Matt, why don't you do seasonality? Take a good time. Raleigh will come in about 10, 15 minutes, and we'll be hosting the training here. Don't go anywhere. I'll see you guys soon, okay? Don't go anywhere, and I'll see if there's a good SCD G trade to the downside. Okay. I'll talk to you guys later. Bye for 20 minutes. I'll see you in 20 minutes.
My screen shared. Okay. Can we see it? All right. Let's read in the chat there. Okay, let's get into it. All right, so the visuals are back. Sorry for the delay. I was trying to catch up on the chat, but there's a lot going on, so I'll revisit it. Uh, Here is your seasonality on the 11 sectors, plus in the bottom right you have the Dow, the SPY, and the Qs. Mixed week. Mixed materials, pretty much oscillating. Get stronger towards the end of the week, but not crazy numbers. Communication seem to be weak. Energy is mixed. Financials, a slight bias to the upside. It's over here in the top right. Not awesome numbers, but not bad. Industrials is just choppy. Tech, pretty relatively strong. Those are decent numbers. They will have more volatility, so maybe not as awesome, but definitely long side seasonally. Consumer staples, um, pretty low beginning of the week. Towards on Friday, maybe they catch a bit week, but for now they're out. Real estate looks like it might be ending its time. It's been really strong the last 2 weeks. Could just be a dip. It's really going back to flat, so we'll have to see how the trend continues. But beginning of the week, you still have some time. Yeah, I'm gonna turn it up. There we go. Is that better? Maybe my settings are off. Oh yeah. There we go. All right. Okay. Tech strong, real estate ending, utilities pretty choppy, consumer discretionary also on the strong side. That makes sense because tech and consumer discretionary tend to move together more often than not. And then the sectors, I mean, excuse me, the indexes, broad market, whatever you want to call them, SPY, Dow, QQQ, they are mostly upside next week. Question John says, hey, man, how do you read or interpret the y axis of the graphs? Okay, so the x axis is time, the y is the expectancy. So on average, you would expect to make 0.5% on Tuesday, the January 22nd in tech. Hopefully that makes sense. Like I said, these aren't awesomely strong numbers, they're pretty weak. Oh, nice, Ian. All right, seasonality's working. All right, let's get into the numbers now. We start the same way every day. We looked at them visually, but here is just for the next few days the seasonality. This is the long system. Real estate is really the only thing that's showing up. Everything else is not in play. On the short side, healthcare looks like a good short still seasonally, not talking about price action. Everything else, chop it around in the middle. And 10-day hold is pretty flat, slightly biased to the upside on most things, but not awesome, which you can really see that in the graphs. They're choppy, somewhat positive, but the market usually moves up long term. So just not a lot of strong seasonality in the broad market, but we'll see if we can find some nuances. All right, let's go back to the long system. Okay. Here they are sorted by accuracy. We like to see 70% or better. Really, on the long system, 70s just the bare minimum. Really like to see more like 78 or above. And the number is 153. That's just not great. Wouldn't take any bias from that. That makes sense. Okay, I see a lot of commodities popping up right off the bat. Uranium, corn, that's a currency, so we'll leave that one kind of on its own. Wheat, real estate again. This is like robotics development fund, robotics ETF. Really technology, I guess. XHB still moving with real estate. Quite a few currencies actually. Usually don't see them up here that much. Agriculture's up. There's another real estate ETF. Small caps, not too bad. And VLTO, zero trades. I need to take that off the list. Oh, and I see natural gas. Baba puts, not for me. Let's look at a few of these because we got about 15 minutes. For, yep. He's already in. He's already in. He is. He does. Sorry, folks. Raleigh is going to be joining us. Well, I can't make myself a co-host, so hopefully that works. Let's load on the trusty Pro Trader dashboard and take a look at a few of these. Let's make this a little easier. All right. So CBOE, I'm going to move this to the left. Not a lot of trades, but that's a great stock. And it's doesn't look too bad. I would have liked, personally, I would have liked to see more of a pullback, but price action is pretty solid. It's not super strong today, but it's really not going down. You want to be careful of that because, well, the market's not really up either. Slightly up. So this isn't terrible. I would give myself a teaser long on this. He's host. Oh, it's a great question. So Liz just asked, why no profit factor for long 100%? It cannot have a profit factor if it hasn't had a loser. You need a loser to calculate the profit factor. Huh? Yeah, I will. Profit factor is your net winners over your net losers. So you had a system, you won 8 times, you lost 2 times. You made $8,000 on your winners and you made $2,000 on your losers. That would be a profit factor of 4. So when you have 0 losers, you have $10,000 of winnings over 0. Then it's nothing. You can't calculate it. The no profit factor is actually a good thing. A low profit factor is bad. But NA does not mean 0. Although I don't know where you saw that. Oh, right here, infinite, showing up as infinite. And one more caveat to that too. This is a good example. See how this says 80%, 88% winners, but it has no profit factor? That is because although this didn't win one of the times, I'm assuming, yeah, it won 7 out of 8. The one trade that wasn't a winner was a scratch. So still not a loser. Let's look at a few more. I'm hesitant with all these smaller funds because they just don't move very much, but you can look at EWJ. It's Matt at rogerscott.com. Well, that's moving okay. And you had a nice bounce right off the 8-day EMA. That's a decent trade. Yeah, I wouldn't take today's option if that's not obvious. I'd probably go 65 February monthlies if you wanted to take that one. You've got Zion looks interesting, 20 trades. It's not really my bread and butter type of setup. Probably not a bad idea because it's really refusing the 50-day and it's above all three moving averages. But the price action itself is a little bit sad. To me, it's a hold. Well Tower. Again, probably not a bad trade. It's moving up. It's consolidating. It looks like it wants to stay above the 50-day moving average. But if you're trading options, I don't like getting into trades like that because you could just oscillate for a while and all you're doing is burning uh, theta time value. I did not look at gold yet, Carla, but I will. TPR, nah, no good. NRG looks great. It's a utility company. It's very strong. Looks like it wants to make another run at the high. And let's look at the options. I take the February 50 strike options. Calls. Pretty tight. I do see quite a few utilities. Oof. When we can look at when seasonally says no good. For a put, I'm not on that side yet, but I will be in just a second. Carla wanted me to look at gold. That's gold miners. Accuracy is okay, but the profit factor is not. Let's get the chart. Yeah, not along with for me. When the bottom pick, maybe you take a bounce off 27 even. Could be an idea. Dennis, this is currently the VIP trade room, and then it'll be gapped green. Richie, this what I'm using is the Pro Trader dashboard. Let's look at the sign. Actually, let's just look at meta. Looks great. Let's find some shorts. Pulling it up right here. Healthcare. Let's look at some of these. Not a lot of trades, but healthcare was the strongest to the downside on the sectors today. Pod, no, I don't love that. Short. GN. Got a pretty good support level at the 100 day. That one. Look at ADP. Looks strong. A looks good. I'm just rapid firing down the list here. Oak Southern. Sure, Mermis. I can make a video. Yeah. Take a look at X-ray. This might be a good short. It's 20 trades, 80% accuracy, 1.87 profit factor. And I don't know. It's a pretty strong trend to the upside. Yeah, I would stay away from it. Out. Steven, you just stay here. So UNH is 20 trades, 80% accuracy, 3 profit factor to the downside. If it breaks the opening range, I would short it. But this was a very strong rejection of breaking the 200-day moving average. I would be careful. So that tail right here. Got sold off, but it found actually, so this is even stronger because of the color of the candle. So it opened here, gap down, found buyers here, and then they really took it back up. Might have been more of a short squeeze, to be honest, but you won't know until after today or towards the end of the day. Lockheed, no good. Tough day for seasonality. A lot of these look great. All right, let's go to the 10-day hold real quick. All right, tapestry. Not my favorite. I like this trend. I don't like this pullback. Nope to Dr. Pepper. Definitely not the corn. Man, that's getting beat up. Not a lot here today. Is there anything else you guys actually want me to look at? I'm going to stop this. Obviously, seasonality is not agreeing with the price action right now, and we're not going to try to front run it. So we're going to let the chart and the seasonality agree. Lily. mm, Probably not a bad trade to the long side. Oh, there's a lot here. Lily, I like. Mara, I don't like to pile into the shorts. That's a crypto name, if I'm not mistaken, or like a data crypto mining company. I mean, aren't they a miner? Yeah, yeah, I don't like Warren Buffett said he wasn't going to do technology. I just don't do crypto. Not until it's figured itself out, because this is the exact problem. It looks awesome, and then it really just. What are you going to do with that? Okay, see Costco. Costco looks great. And earnings. You had earnings. They were good. That's probably a great company. Well, it is a great company, but that's probably a good buy, especially if you wanted a short term trade right now. It's super strong. Volume's a little low, though, so be careful. Win is too choppy. Not yet. Yeah, he is the host. He's been typing in the chat, though. Don't like it. Did I do cop? ConocoPhillips. I like it for a short, not a long. Tesla. It's too close to earnings for a swing trade. Mark, what's your question about that? AMD. You could front run the 168, see if it's going to break out. It might. Looks like it's going to try. I would just be really careful with it. Mark, where did you see that though? Yeah, Tesla has not had a good earning track record, but you just never know. Yeah, there's a level on Tesla in the Telegram. If you wanted to know Roger's thoughts, I would imagine it's around 198. Is that your level, Roger? Close to it? You put it in the free Telegram. Oh, it's 206. Oh, you want that bottom. Yeah.
There we are.
206, 198. That makes sense.
Why does it have my green screen behind me?
Check your settings.
Yeah, that's weird, huh? Hold on a second.
Cyber. Yeah, you might have missed that move.
But this one doesn't have it. That's weird. Very strange.
I think
That's
Roger,
very
if you
true.
go ahead and share on your virtual background, it'll take care of that.
Virtual background. I'm there. It doesn't have it.
It's not giving you any
Let me
options.
No,
come over
no.
there.
No, it's
Oh,
like I logged into a different system. Hold on.
well, you're green with envy.
Yeah, I may be green today. It's not in this. This is in the other. He gave me a different link, so it's all good. Don't worry about it. It's all good. Don't worry about it,
Go
guys. I'm
green.
going to go the bottom ones. These ones, the none or blur. Yeah. So we'll just do none. Now we'll do blur. Why not? All right. Yeah. See, studio effects. Yeah, I think I'll be all right today. Raleigh, can you hear me okay?
I can hear you just fine. And it was really kind of fun coming in a little bit early onto this program. Matt doing an awesome job. The Pro Trader Bat dashboard is incredible. You know, the way that you're able to respond to people's questions and show them what's going on, the seasonality. Roger, it was quite a treat for me. And I'm delighted to be here.
It's great. Fantastic. All right. I'm going to mute my sound because I hear myself coming from my speakers, which is really weird. You know what I'm going to do? I'm going to log in with my other link, with my VIP link. Let me try doing this. I'll be right back. Give me a second.
Sounds good.
Roger, it's because you're logged in twice. That's why you have an echo.
Matt, it's a full time job.
Yeah, I see you.
Okay. That's the
There.
problem.
Oh, oh, oh,
Okay,
oh.
that's the problem. I was logged in. I'm an idiot. This is okay, guys. I am an idiot. I shouldn't be here right now. I'm an idiot. I literally was trying to log into a Zoom account and go live while I was already live in a Zoom account. Raleigh, you just can't make stuff like that up
I
sometimes.
know. But you know, folks, this is live. This is live, live, live. This is not a recording.
No,
This
no,
is
no.
this is real stuff.
Yeah, I was going to say the positive here is you could see that there's no monkey business here. This is as live can get.
Nice shift on the backdrop, by the way. I really like that. I'm coming
Thank
to you
you.
virtually from the New York Stock Exchange. I told everybody to get out, so they left the
Right. There's
room
no one
totally.
there.
There's nobody here, so that we can pay attention to what you've got to say.
You know, it's funny. I was reading an interesting article. I was a very interesting article about how when the pits went away, a lot of the pit traders tried to replicate what they were doing on the computer, and it was a very, very different animal. It wasn't the same because you can't see the reactions and the depth of the market in real time.
Right.
And it was very difficult for a lot of guys to get a hand on it. But it was a very interesting read. If I can remember where I read it somewhere just a day or two ago. But if I can remember, I'll post it for you guys and I'll share it. But welcome everybody, and thank you for being here. Now I'm going to go ahead and share my screen, Raleigh.
All right.
Hopefully, I'll be able to do that without getting into too much trouble. I mean, you don't know how many screens and how many things I have on right now at one time. I mean, it's like it's something else. All right, let's go to slideshow. You should be able to see my screen.
Absolutely. We see an important disclaimer.
That's the key, the
What
important
we've all been
disclaimer.
waiting for, Roger, is
Of
this slide
course,
right here.
of course, obviously, and it happens to be the first slide. So, folks, profits. So, folks, here's the deal. If you're here, if you're brand new here, Raleigh is my sidekick. He's going to be answering all your questions while I'm doing the class. After we're done with the class, I'll be here to answer all questions that you may have. Now, folks, this is going to be the last time we're doing this, and I believe we're closing this out at midnight today, which
Wow.
means
Okay. Mhm.
you snooze, you lose. One more thing, I am going to be issuing a trade right after this class is over. I'm going to be issuing a trade. And I want to make sure you guys get in on this trade because, my track record's been pretty good. Although I can't make any guarantees. We don't know what the future holds. We really don't. It's a probability game. And that's how we have to treat it. We have to treat it like a probability game. So profits, everything we're going to be showing you to, it's not typical. I'm not a typical person. We can't make any future claims because we don't know what the future will hold. There are risks in trading. There's no way around those risks. This is not a black box system. I will explain in great detail everything that we do here. You can lose money. There's potential for loss as well, although my track record over time has been pretty good, but I can't make any future claims. Today is the final day that I'll be doing this presentation. And today's strategy is not something you'd normally see. You see, while the talking heads on TV love to play Monday morning quarterback, I mean, they love playing Monday back quarterback, only talking about the stocks that have already soared, the expensive stocks, the stocks carrying all the risks. Now, today we're going to open your eyes to a new way of trading, something a little different. It's only possible from first spotting falling stocks. In other words, the stock has to go down, prove itself. There has to be a mechanism to cause it to go higher. The stocks that CNBC, Yahoo Finance, Forbes completely avoid or say bad things about, or Kramer stocks, as I like to call them, stocks that have been bottomed out and are ready to go higher. When we have a chance to get in on these stocks at a massive discount and aim to ride them back to the top in just a few days, all thanks to a little known pricing pattern I call gap to green. Take a look at what happened to Pfizer, ticker symbol PFE. It's actually, Pfizer was moving pretty good today. Back in December, news drops that Pfizer sales could only get uglier. Pfizer profits will fall below expectations. Pfizer tumbles after warning that the next year could be worse than this year. That's not good. That's not happiness, okay? The day that the news dropped, the stock, it took a bath, took a bubble bath. A lot of traders would have written Pfizer off at that time. But gap to green thrives off of this exact kind of setup. By following the formula that we're going to share with you today, what looked to be a dead stock would have turned into a treasure trove. Sure enough, just look at what Pfizer did over the next week. Call option rallied 133% in just 8 days. 8 days. $2,500 invested could have turned into almost $6,000 in just a week. Could that have helped you out? Of course it could have. All from a stock that 99% of people wouldn't want to touch with your money. Of course, no trading strategy wins all of the time. But I've been able to use a unique strategy, just like these, to repeatedly score meaningful returns in various trading programs, which I've never shared the gap to green method with the public before this special broadcast. Just hear what some of my best students have been saying about my work recently. I doubled my account in a month, up 92%. Angie. James says, I started with $4,000 and now have over $8,000 in just 15 days. James. I took a small $2,000 account and turned it into $17,000 in just 6 weeks. I love it. You are 90% win rate on the trades I've taken. I love that. And dozens of more stories just like that. But the gap to green is unlike anything I've ever seen before. And to be very honest with you, compared to a lot of trading strategies out there, this strategy is perfect whether you're a brand new or a seasoned vet. Takes years of experience? Nope, does not. Involves confusing spreads? Nope, does not. Not at all. Can lose more than you originally invested? No, it's limited risk. You need a large portfolio? No, $500 to $1,000 will do it. You don't need a large account at all. Not at all. It's all from finding stocks that fall overnight. Take a look at Walgreens. This is a good one. On January 4th, the stock dumped 5.4%. It's meaningful. Now, I'm sure a lot of investors were frantically searching the internet, scratching their heads why Walgreens puked. But none of that really mattered to us. With the gap to green method, it's just what the doctor ordered. And just one day later, Walgreens hit the entry price, which means it could turn back green in just a matter of days. Sure enough, that's exactly what happened. 141% return on the options over the weekend. $2,500 investment could have turned into $6,000 by the time Monday hit. I like that. More than the average Joe brings in on the bi-weekly paycheck. All thanks to a brand new gap to green strategy. What we'll cover today: how to identify high-powered gap to green bull runs on news-driven overnight gaps, 3 key pieces of confident gap trading, why trading one day after news or earnings has allowed us to get in on our trades for much cheaper, why we believe right now is the perfect time to get started on this explosive step-by-step trading strategy, how to use price action as an indicator instead of indicators, price action to identify exact entry points, profit targets, and stop loss levels for increased profit factor. Discover the method where we've had the opportunity to win even when the trade went wrong. I love that. Now, today, I'm asking you 3 things. Put all your past experiences, the negative ones especially, behind you. Clear your mind of all the stuff you hear on the news and prepare to commit yourself to a real trading plan. Now, if you're willing to do all of these, then put yes in the chat. I love it. Welcome to Gap to Green. Folks, let me tell you a little bit about me. I've been doing this for over 30 years. One of my clients included one of the 10 wealthiest families on this planet. Partnered with Kevin Hassett, the senior financial economist to President Trump's administration, the senior financial economist in our country. I've partnered with Kevin Hassett, who's Charles Calamirez, who's the Ivy League professor of Columbia University for the last 35 or 40 years. They're featured on CNN, CNBC, Fox News. They advise every president for the last 30 years, and they are in line, or were in line, I don't know about right now, to potentially take over Powell's job before Powell got his job. What I'm saying is that's the kind of people I'm talking about. I've shared my work, and I've also been partners with Curtis Faith, who's the youngest turtle trader. And if you don't know what that's about, watch the movie Trading Places over the weekend. It's a funny movie. It's very, 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 very loosely based on that story. I've shared my work with over 500,000 people worldwide, and I'm just getting started. Folks, I can't wait to share with you the entire strategy behind the Gap to Green, which may be one of my favorite strategies. And that's saying something, given the amount of success stories that I've been hearing from my other popular work lately. Roger, thanks for the dollar DG trade yesterday. 290% in profit. I love that. Love it. Boeing. I made $1,018 on Boeing in 45 minutes. That's from earlier this week. I think that's from Tuesday. Monday, the market was closed. Benefiting greatly from your work. Brett, $2,270. How can you not love it? You see, with more news moving stocks are very news driven right now, more than ever before. There's a lot of sensitivity to stocks. It's never been a better time to go for the Gap to Green project. But before I break it all down to you, let me be very honest with you. Let me be frank. A lot of my students come to me because they failed to make money in the markets. They've had knuckleheads tutoring them and teaching them, picking tops, trying to time the market, selling naked options, cockamamie ideas that I don't know how you guys come up with, but God bless you. You've tried. That's because most people don't have a plan, a real, legitimate, usable, bona fide plan, right? See, I'm in, Gwyn, Dennis. Yes. Fidelity says fear and greed. See, when you don't have a plan, fear and greed take over. And when fear and greed take over, you're done. You're lost. You're gambling. Without a plan, it's very difficult to improve as a trader and keep moving forward. The fact of the matter is, every great trader has a plan. I've learned this firsthand. I started with $5,000. I ran it up to $37,000. Within 5 months, it started dwindling away, going down. I got to about 8,000. I capped it, and I almost cried. I figured out that I didn't know what the hell I was doing. It took me 5 months, but it's been 30 years. It didn't take me 30 years. It took me 5 months. You see what I'm saying? I've spent many, many hours learning from the best, and I developed a plan that has positive expectancy. And if you want to know how to make money in the market, look up the word positive expectancy. That's the formula to how to make money in the market. Unfortunately, without a plan, trading only gets harder. In 2023, we saw more news-driven big stock moves, more time than anything else, Fed announcements whipsawing the markets, volatility spiking with global tensions skyrocketing. And I hate to be the one to say it, but 2024 is already starting to look very similar. There's a lot of monkey business going on. All of these factors help wreck accounts. And for a lot of you, that hurts. It's like we're not billionaires trading with funny money, right? It's our hard-earned capital at play, and we want it to work for us, not against us, which is why today I'm sharing the gap to green trade setup with you. What is the gap to green? It's a strategy that follows news or earnings. It takes advantage of market overreaction for short-term rally. It's very clear-cut, stop loss, profit target, very, very quick. Let me give you an example. All right. Let's look at Restoration Hardware. Okay. Short-term overreaction to news. They didn't do well. They had a bad quarter, December 7th. The stock gapped down pretty good too, from what I could see right here. We had our entry price set. Our entry price got filled right there. Stop loss got set. And our profit target was set. And we hit it within 3 days. Quick 3-day rally on the stocks. 213% gain on the options. $2,500 invested would have turned into $8,000 plus in just 3 days. And as you could see, the trading plan couldn't be easier to follow. So what's driving these lucrative opportunities? Emotional overreaction and panic. When news or earnings hits, there's generally a large move in the stock price. Even when earnings are positive, like with Boeing, any minor negative news associated can cause a short-term sell-off, a temporary imbalance between the bulls and the bears. The bulls and the bears are just arguing and arguing and arguing. And to make things more drastic, Investopedia says retail investors are the ones who usually exhibit irrational exuberance, which means you're causing more trouble folks, if you see from a distance how people trade, it's laughable. It's funny watching people trade because they can't, they go out of their way to make the wrong decision. Out of their way. If you should be buying here, they'll buy. It's like, you go left or right, they always make a left instead of a right. Every time. You could track it with certainty. So now we have a strong stock that's been on a bullish trend, creating a short-term buying opportunity for both of us. Investopedia says those who study the underlying factors behind a gap and correctly identify its type can often trade with a very high probability of success. And that's exactly what the gap to green is designed to do. Whenever fear is created in the marketplace, position traders come out to close their positions, taking their profit. And this can create an imbalance, a short-term imbalance where there's far more sellers than buyers. Take a look at what Comcast stock. Take a look at this. Comcast missed earnings, causing market to start dumping. Comcast sings despite profit beat as broadband subscribers slip and revenue slumps. Nothing there, right? The next morning, Comcast was down 7%. I love that. More sellers than buyers. An amazing opportunity for swing traders. We always know our entry price, we know our stop loss, and our profit target. The next day, the very next day, the stock hit our entry price. CMCSA shot up like a rocket ship, literally like a rocket ship, hitting the profit target in about a week's time. Not bad. Had you taken the typical option trade, you would have made 171% in 7 days. I like that. $2,500 invested could have turned into $6,700 in 1 week. So far, from the examples I've shown you, you could have made $5,800 in profit in 2 days, $3,500 in profit in 3 days, $3,300 in profit in 8 days, $4,300 in profit. I'm rounding it out in 7 days. Those are some juicy gains. All in all, that could have been almost $17,000 added to your pocket after just 4 trades. I like that. And typically, I'm going to give you 20 of these per year. That means we get about 5 times the potential that you see right now. I like that potential. Now, it's more important that I remind you that not every trade is going to work out. There will be winners and there will be losers. That's why I always tell my students to never invest more than you can afford to lose. Luckily, you don't have to. Most of these trades can be taken with as little as $250 on average. And some of them were cheap, $68 to get in. Not a lot of money. It's absolutely perfect for you, whether you have a massive account or just getting started with a smaller one. So what causes this gap to green strategy to run like a well-oiled machine? The news, we got to have an overreaction. Bears do all the selling up front. Then once the bears are exhausted, the buyers step in. We just play the highest probability entry and profit target. According to the street, they actually outperformed the market. Gaps outperformed the market. Did you know that, Matt? He knew that. And Market Watch seemed to be a huge fan of this strategy, simply because gaps tend to get filled. But remember, without a plan, we're doomed. Now, I want to walk you through the exact trading plan for the gap to green. 3 key rules for getting started. Focus on large cap companies, isolate healthy trending stocks, and avoid catching knives. Stop playing the catching knife game. Focus on S&P and NASDAQ stocks. That way you don't have to worry about low liquidity, illiquidity, options that don't have anywhere to go. Don't trade stocks outside of U.S. hours. Don't trade penny stocks, biotech small cap stocks. No monkey business. You guys know how I feel about monkey business. You isolate trending stocks. You see the stock, it's very choppy. It's very choppy. It's like this. We don't want those. We want stocks doing this. We want trending stocks that have a gap. Don't try to catch a falling knife. It's no good. It doesn't work out most of the time. So, what are the rules? We focus on large cap companies, we isolate healthy trending stocks, and we avoid trying to catch a falling knife. All right, so now that we know which stocks to focus on, let's talk specifics, okay? We need to identify the best gap fills plays. We need enough room to retrace. We've got to have a good risk to reward. We're looking for more than 2% on the gap, so there's profit potential, because the gap tells us how much profit potential we have. We got to have stocks that have adequate volume in the options. 1.5%, not enough. We need a little more juice. 7%, now we're talking. Now we're talking. We want the gap with the biggest profit potential, but not a crazy gap that are like we don't want a Humana kind of 50-point gap. Once we find that, it all boils down to entry trigger, stop loss, and profit target. And the goal, hit our target within a few days. Let's see it in action. Arm & Hammer, CHD, we traded the stock earlier this week. I think we scratched it. I don't remember. We trade a lot of stocks. In early November, CHD lowered their earnings forecast. It happens. It happens. The sellers stepped in as the stock fell 6.4%. Did you know, Matt, that Arm & Hammer was actually created by a Ukrainian guy? Yeah. The sellers stepped in. He didn't know that. See, I stumbled him. The sellers stepped in as the stock fell 6.4%. The sellers stepped in as the stock overreacted. And then the buyers came in. But with the gap to green trading, we got a plan. Entry is above its break. It breaks above the gap minus the wick. We don't count the wick. We have a built-in stop loss. We have a profit target. And it's all built into the trade. Now, November 6th comes around. CHD broke above the entry trigger price. And ba-boom, it smashed it. Option traders that use the gap to green strategy, they would have seen a 98% return. 98% return. I like that. So to recap, with the gap to green, we know the entry price, the stop loss level, and we know the profit target. That's a trading plan. Let me show you how the strategy works again, this time on Nike. Back in August, Nike was not doing well. Foot Locker and Nike, it's like China and Wynn Hotel. They're very related. Nike and Foot Locker, because look, Foot Locker's a retailer for Nike. They don't say that, but that's what it is, right? And when the market opened the very next morning, the stock was hit hard, down 3.5% on the opening. But we had our signal, we had our entry, we had our stop loss, we had our profit target. It was all there for the taking. The next day, crossed the entry point right there, got our profit target. Option traders could have made 42.6% in just 5 days. 5 days. I like that. I like that quite a bit, actually. Now, 42% overnight is not huge. Okay, it's not massive. 1 second, I got to take care of something. 1 second here. Okay, sorry about that. Just had to take care of a few things here. But when you consider that these gains can stack up, it can lead to something really, really good, like really, really solid. It can really make a big difference at the end of the day. That's right. They add up. Now, listen up. Right now, we've seen wild swings in the market. I mean, real wild swings in the market. One day, stocks are rocketing. The next day, they're plummeting. And with just a little bit of news, we've watched Amazon, Nvidia, and others soar overnight, and stock like Tesla and Apple and more tank overnight. I hate to break it to you. Bad news is not going anywhere in 2024. It's just getting started. I really don't think there's a better time than right now to take advantage of this gap to green pattern. Now, I'm about to do something for the first time ever. You've seen some of the top success stories for my students, like Damien, who took $2,000 and turned it into $28,000. It's pretty impressive. David, who took $20,000 and turned it into $80,000. Wow. And others. I used to tell you guys, I used to have a document. I stopped, customer service now has it, but it was 124 pages of testimonials when I finally turned it over. Folks like my work. They make money. I've been doing this for a long time. I'm experienced. In all of my years, I've never seen a trading edge that masters gaps like gaps to green does, which is why today I want to fast track you and invite you to participate in a special trading group that's never been offered before this broadcast. It's called Gap to Greens. And Gap to Green Alerts is solely dedicated for isolating these high probability setups like I've shown you plenty of times today, and turning these falling stocks into double and triple digit trading opportunities in just a few days. Now, in just a few minutes, you could be trading alongside me and the powerful gap to green phenomena inside the Gap to Green Alerts. But before we get there, let me walk you through what you can expect when you join the Gap to Green Alerts. The moment my system spots that the stock tanked over 2% and hits our entry trigger, I'll verify the data and send you out an alert immediately. I'm going to do it right after this class is over. And today's the last time you're going to get this opportunity. Look at that. We just closed out Apple. I love it. You guys made money in Apple? Yeah, you did. See, I multitask. The moment my system, there's our exit target right there. The moment my system spots a stock that's tanked over 2%, hits our entry, I'll verify the data and I'll send it out immediately to you. Immediately, I tell you. You'll get at least 20 of these alerts every single year. You'll receive them via email, SMS, Telegram. You don't have to rush. They're not day trades. You don't have to run to the computer or anything like that. And within about minimum, you get the highest opportunity with the highest conviction rates. And again, you don't have to rush. These are not day trades. They're not going anywhere if you miss a trade, okay? Now, with your first trade alert coming out today, it'll look like this. It'll give you, this is not it. This is just an example. It'll tell you the fill price. Once we get filled, it'll tell you the date. Obviously, you need a date. It'll give you the alert information, the ticker symbol, instructions if you're just trading the stock, instructions if you're trading the options. Yes, it'll give you the options too. And while there will be winners and losers along the way, just look at what some of the top results so far from the data have shown. 94% in 4 days, 125% in 6 days, and the best one so far, 279% in 16 days. Even just $2,500 invested could have turned into $9,475. I like that. And the best part is you could have gotten in with as little as $120. Now, you'll never have to guess how gap to green alerts are performing because we have a trade tracker, and the trade tracker will tell you everything you need to be able to execute the trades effectively. We'll keep track of every single alert along with the win rate, the profit factor, the average hold time, the stock statistics, the option, and everything else. Absolutely everything else. Not sure where to start. Want to see behind the curtain at our gap to green scanner? Of course you do. The masterclass. I'm going to do a masterclass. I have it scheduled, I believe, for next week. Yes, next week, beginning of next week. We'll record it. We'll put it in the members area. It'll give you all the tips, the tricks of the trade, and we'll be able to hang out and work it together. What do you think? Not bad, right? We'll go live to cover the best of the gap to green, parameters, adjustments, the alerts, the signals, the entry, the profit target, everything you need to know to start getting juicy gains on it, right? And I'm going to give it to you for free. You don't have to pay anything for it. If you ever have any membership questions at all, you'll have VIP level assistance from my US-based customer care team to assist you with any questions that you may have. You're going to get the alerts, the log, the VIP support, the class, the master class is going to be great. Now you're probably wondering, what is the membership going to cost you? While I'm extremely proud of the track record in my other services, nothing I've ever built in regards to gaps can compare to this. This is very, very cool. And that's why my team and I believed that, and I told them, I said, you should sell this for $29.97. That's what it's worth. But here's the deal. It's tough out there. It's cold out there. And it really is cold out there right now. In the past few years alone, the cost of everything has gotten out of control. I mean, everything. Eggs, bacon, chocolate, everything. Vacations, everything. And it seems like we just can't get a break. Rising costs, services, goods, everything. Everything. That's right. Yeah, simple calls and puts. That's all you're doing. So when I first created the Gap to Green alerts, I wanted to make sure price would never be an issue. That's why today it's not going to be $3,000. For founding members, that's right, founding members, I've dropped the price dramatically. In fact, here's the deal. I'm on a mission. Matt, do you have the music? Dun, 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 dun. I'm on a mission to bring 20 of my highest conviction Gap to Green trade alerts over the next year. And I'll give you some bonuses, I promise. To ensure that anyone and everyone has the chance to jump in on these 20 Gap to Green trades alongside me, because you're here right now watching this webinar today, I'm going to cut $2,000 off the normal price. That's $100 for each trade alert I plan on sending out. Not bad, right? So instead of seeing $3,000 price target, you'll be able to secure your membership for $997. Yes, yes, yes. That's not all. I'm very confident I'm going to give you a 1-year guarantee. I'm very, very confident. I want you to try it for a year. Really try it. See how it works out for you. Visit the master class, kick the tires, do all the stuff that we participate. And if you don't find that it's profitable, call my team and we'll refund every penny back. Think of it as a way to test drive the service before fully committing. Now, you're probably wondering, why the heck am I doing this? After all, if you're really wanted, you could join today, take a full year, and then say, I don't want it anymore. But I don't think you're going to do that. I don't think you're going to do that at all. You'll get a full refund if you're not happy after a year. But that's the risk I'm willing to take. I'm not really worried about it one bit at all. Because once you join the Gap to Green alerts, I'm willing to bet you'll look back on this day as one of the greatest investments in yourself that you've ever made. And no, I know that this big statement, but industry-leading full-year money-back guarantee, I hope you could see that I'm putting my money where my mouth is. The choice is yours. Today, I'm looking for a brand new opportunity, and we're going to be closing this at midnight, folks, and you're getting it at 66.6% off. Midnight tonight, no more soup. Enrollment closes. So if you're ready to become a founding member of my newest service, Gap to Green Alerts, ready to click the link in the chat, do it right now. Don't delay, don't procrastinate, don't miss out on this opportunity. It's going to be a good one, a real, real good one. And I want you guys in there. Please take me up on this. Go to rogerscott.com/gap. Do it now. Or give us a call, 904-404-8873. All the details of your Gap to Green Alert memberships are on the next page. When you join through the webinar, you'll get full access to the private members portal as well. Plus, an instant $2,000 savings. The special price is only guaranteed if you're one of the first traders in the door today. So don't miss out on this rock bottom price to join the Gap to Green Alerts. I'd hate for you to pay $3,000, but once I start, you know how things go. Click the link in the chat or give us a call to secure your membership and instantly save $2,000 today. Get your new trade alert. Go to rogerscott.com/gap. Get it right now. Just look at what some of my top students have been saying across all my programs. I don't think there's another place in the world that offers this type of access. David. I really appreciate all the content you post. Rob. I did a bunch of research before joining. And Trading Pup, they were by far the best option out there. Emmeline. These are some of the best stories that I've heard from my most dedicated traders, and I cannot wait to hear from you. It ends at midnight tonight. Important announcement. Don't exit the page. As one of the first members, if you join for lifetime, I'm going to give you a scanner. The scanner will be able to alert you to opportunities without you having to rely on me. It's a piece of cake. You press a button, the scan button. It takes literally 10 seconds. And once you're ready to go, you click the scan button. You hit the hit list. You set the entry trigger, profit, and stop loss. And you're ready to rock and roll. Free for all lifetime members. Don't pass this opportunity. Jump into 2024 with all the tools you need to chase after your financial goals. New trade alert is ready to go. Enrollment officially closes at midnight tonight. You've got a couple of choices. You can pretend that none of this is true, that it's all phony baloney, that you can keep doing what you're doing. Just keep doing what you're doing over and over and over and over and over again, expecting different results. There's another choice. Make 2024 what could be your best year yet. Join me in the brand new Gap to Green alerts and upgrade lifetime to get the scanner for free. To my knowledge, Gap to Green alerts is the only place on the planet where you get 20 active alerts per year on stocks that tank overnight due to earnings or news, and can turn them into what could be double-digit trading opportunities in just a few days. Secure your spot at over half off and save $2,000. And don't forget, it's all backed by 365-day money-back guarantee. $9.97, go to rogerscott.com/gap. Some questions. How many alerts per year? 20, but I promise I will be giving you more than that. I'll be giving you more alerts than that. Can you use Gap to Green alerts with my current brokerage? Yes, all major brokerage. All major brokerages. Is this small account friendly? Yes, it'll be issuing option trades that cost anywhere from $150 to $450. How will I receive the Gap to Greens? You will receive them via email, text, and Telegram. So is the Gap to Green alerts for beginners? Yes, of course it is. It's actually a perfect way to start trading. It's a great way to start trading the markets. That's why I want you guys to try it out for free. I mean, not for free, for a year. And then if you're not happy, I'll give you your money back. Which basically means, and yeah, that's what I was talking about, the scanner. Scanner is fantastic. Upgrade to lifetime and get the scanner. Now, what trading platform is compatible with Gap to Green? Think or Swim. That's the platform. That's the platform you need to take. Does this program do stocks and option trades? Of course, you could do stocks and options. How does this compare to other programs? It's very different. It's slower motion. It's Trading Pit is like today. We already closed out Apple today. We closed out 3 trades yesterday. We closed out a trade this morning, a trade now, two trades yesterday. Trading Pit is very active. It's for people who are around, who have their literally have their phone in their hands. But this is more for slower action. All right. Get yours now. Go to rogerscott.com/gap. Oh, PayX, profit target. This is a stock I gave you yesterday. And by the way, it's doing pretty good right now. I don't think it hit our entry. It might have, but the profit target is 127.78. Now, do you want the options? Do you want someone to help you follow along? Then you need Gap to Green. See the new trade alert in action. Don't spend $3,000. Spend $9.97. Do it now. Do it now. Get the access. Get minimum of 20 trades a year. You get official trade log with performance. You get the master class, which is going to be very, very cool. You get the scanner if you're a lifetime VIP member. And you get VIP level customer care. All of that is for the taking. Let's take a look. See here, and let's see if we have any questions.
Hey, Roger,
Oh,
Raleigh
there
here,
you
man.
are.
Yeah, yeah, great presentation. Awesome presentation. As a matter of fact, very, very thorough, and you answered many of the questions that were answered. But so a lot of people were saying, and I think they may already be in the class, they were going, like, Roger, when am I going to get that first alert? And that's going to be today, right?
I'm going to be working on it right after I'm done here. And here's the cool thing. And here's the cool part. If let's say that there's a gap, and let's say that a stock is getting up to the gap and it's not ready yet, I'm going to give you a couple of those. So in essence, you're always going to have more stocks to trade because some of them just haven't hit the gap yet.
Okay.
So I can't cause them to give the gap. I can only give you a stock. So one of the reasons why you're only going to get 20 is because I want to make sure that they hit the gap. But if the other one I give you hits the gap later, boom, that's another extra stock you're going to get. Joan says, why didn't I get yesterday's alert? Joan, what are you talking about? What alert yesterday? What
Yeah,
alert yesterday? I
yeah,
want to
no
know what
alerts have been issued.
I
Yeah.
know, but I want to know what Joan is talking about. She
Yeah.
wants to get an alert yesterday, but we haven't issued one, Joan. How can I give you an alert if we haven't issued one yet? But yeah, Raleigh, I'm gonna work one up. I wanted to wait till Friday because these are not day trades, and we're gonna have to be holding over the weekend. So I wanted to get as close to the weekend, and I wanted to see the market pull its do its little number. So the folks will get one. They will get one today. They will definitely get one today. Matter of fact, they're going to get one in the next couple of hours. And one of the coolest things, I just want to say, one of the coolest things about this, you could trade this in your IRA. You could trade this in your retirement account. Hugh says, how, when are stops price given in options? They're not, Hugh. Hugh, how long have you been hanging out with me for? I think Hugh's a beginner. Hugh, we don't trade the option. We trade the stock and we react with the option. The option is a proxy for the stock. What you guys need to do is take a piece of paper and a pen and write this down and put it on your. The option is nobody. If you ever meet anybody and they trade the option, they should be put up in the nutty house because the option goes like this. You can't trade the option. You got to trade the stock. You react. So if the stock gets an entry signal, you buy the option. If the stock gets stopped out, you sell the option. If I tell you get out, you liquidate the option. So thank you, T. So the point is, you never ever you look at the option. The option is just a tool. It's a proxy for the stock. I hope you understand that, Hugh. Don't ever trade the option. Use the option, but don't trade the option. Trade the stock. Ed says, any problem to install Gap and GAN on the thing? If you have no, Ed, you could install multiple things on the dashboard, multiple things. And remember something: the Pro Trader dashboard you're going to be looking at all the time. This scanner's not. So I like the way Roger's services work. What can I do in my line? My accounts set stops. Thank you very much for saying that I'm the best, John. I'll let Raleigh answer the best. I'll just read the part where you said I'm the best. I gotta have fun with you guys. I gotta have a little fun with you guys, right? I got this. I really truly love being here. Do you remember, Raleigh? Do you remember when I was in Puerto Rico and we
Yes.
had that webinar and my eyes just lit up when I saw you, and I was like a kid, like it was like a kid coming home or like going to play with his kids at a play yard. I was home, I was where I was supposed to be, you know. So anyways, I love being here. I could chat with you guys all. As a matter of fact, they offered me to take a break after my VIP room and then before I come here, and I'm like, no, I love the energy. I like you guys are the best. You guys energize me.
Plus, you're on a roll. Plus, you're absolutely on a roll.
Thank you. So the lifetime price, there's two prices. There's the 1 year, and after you buy the 1 year, then you can apply for the lifetime, and the lifetime will include the scanner. And again,
that's right. But by the way, Roger, to that point, the upgrade price is $800. So for $17.97, folks, and this is just going to be here. It's going to be over today. $17.97, you get lifetime plus you get the scanner.
That's
Roger, $9.97 for the year, or $17.97 lifetime, and you're throwing in the scanner because the scanner's not available, guys. It's not for sale. The scanner's only available to those that upgrade to VIP.
And by the way, I don't want to make a commitment because people will start asking me, is it going to be ready yesterday? But I am going to be making that scanner more and more advanced because I believe that scanner could be used to include other things that I'm looking at. like option liquidity and all of these things. So the next couple of weeks, I'm going to and remember, there's no, like, once you own it, remember it's lifetime, so there's no rush. I don't have to rush. No, there's no rush here. Like, I'll give you a good example. We just upgraded. It took like 6 months, but we just upgraded the scanner yesterday for the first day in the data miner. So we really actively work on improving our things. We don't just sell things and say, oh, okay, it's done, let's move on to something else. Matt and I, we're reevaluating things, re-examining things, keeping track records of things all the time. When you guys are not around, you should see Matt and I. We get in. I'm sitting by his computer. He's showing me analysis. We go really deep. We go really, really deep. So my point is, I want you paid for by you, guessed it, my profits. Thank you, John. I love it. I love it. Bodine says, to clarify, I think you mean make decision based on the stock chart, not the option. Yes, exactly. Right. But we actually trade the option. Yes. So just again, to explain, we're always analyzing the stock. The stock tells us what we need to do with the option. We don't look at the option to determine what we're going to do with the option. We look at the stock to determine what we will do with the option. The option is kind of like, okay, let me give you a really easy hypothetical. Let's say you take let's say that you take a rope and you tie something like a ball to the rope and you walk around. Is the ball going to dictate where you're going to go, or are you going to dictate where the ball goes? You're going to dictate where the ball goes. So it's very, very important. It's very, very important that you guys understand and track price action that way. And that's how I do. By the way, I do that for everything, not just for this program. I've never in my life looked at an option unless I'm selling options. And even then I'll start with the stock, but I don't do that. I never look at the option. I always look at the stock. The stock always tells me what to do. Always, 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 always. I've never in my life once analyzed an option. I've never seen anyone analyze options, truthfully. The only time I would analyze options is if I want to see if the option has unusual activity. And I don't do that. That's Lance's gig. That's not my thing. I'm a technical trader. He looks at option flow, which is great. It was just very different. But getting back to here, you don't have to worry about options. We look at the stock and then I'll give you the option. And sometimes I'll give you more than one option because I'll give you more than one stock because I don't know which one is going to trigger the because remember, look, a stock gaps down, okay? And then it can let me do you is it okay if I give them an example, Raleigh?
Absolutely.
Okay.
Sure.
So let me show you. Let me show you what I mean. Okay, here's my screen. You could see my screen right here. So let me give you a good example. Apple. Okay. So look, can you see my screen, Raleigh?
Yep, see it perfectly.
Okay, great. So this is Apple Daily. This is Apple 5 Minute. I could talk about it. We just got out of it. We took like a 40-cent profit on it, 50-cent profit. We had it less than an hour. People made good money on it, but that's not the point. The point is, look at Apple gap right here. Okay, see this gap? When was this? Well, this was Tuesday. This was the first day of the year, first trading day of the year. That was 19 days ago. Okay, so I went to my scanner. This is very helpful for you guys because it'll explain to you how we trade this. So we got the gap right here. I know based on this gap that if Apple trades above this level right here, I'm going to buy. If it trades below this level right here, I'm going to liquidate. If it trades right here, I'm going to get out of profit using this system. But here's the problem, and here's what I'm trying to explain. Not a problem, but here's what I'm trying to explain. So here's where we get the gap. But we don't get our entry all the way till the 17th, or sorry, the 18th, the 18th. So the signal came on the 2nd, but the entry didn't come till the 18th. So what I would do if I'm looking at the stock, let's say I'm looking at the stock on right here, or right here, or right here, or right here, or right here, I'm going to send you an alert, and the alert will say, hey guys, I like Apple. Here's the strike price and the option I buy. This alert is only good for the next 10 days. And if Apple goes above this level, and I'll give you the level, which above 180, this is all hypothetical, above 187.35, for example, you need to buy Apple. And I'll send you an alert when that happens. But that's the plan. We're going to buy Apple when it goes above 175, and I'll send you the option at that time. Because why would I give you the option now? It would be kind of stupid. So you will know. So Do I know if Apple's going to go above this price? Of
Nope.
course not. I have no idea. But you see how many days I have to prepare for this trade right here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. That's why I'm saying it's not like we have to rush or we have to prepare ahead of time. Like right now, I'm going to be finding stocks that gap like this that are like right here, but they can come down. They don't necessarily have to come up, which means you won't get a trade. That's why you're not getting like 100 trades, because a lot of the trades I'm going to give you won't signal, which is a good thing. That means it's going to go down. We want stocks that are going up. So we want the stock to prove itself after the gap. And that's why it's so important. Let me give you another example. Nike. Okay, here's a perfect example. Nike gap down right here. Right here. Let's just say this was the entry. Let's just make it really simple. Let's say that this was the entry price, not this. This is how we use the system, but let's just say it was right here, okay? So I would wait till we're like right here somewhere, and I would send you an alert, and I would say, hey guys, we're going to go long Nike when Nike goes above 111.10. And I'll give you the option when it triggers, because there's no point in me giving it to you now. That's an alert. Now, what did Nike do afterwards? Nothing. I'm going to end up canceling.
Yep.
Right. So I'm going to end up like 3-4 days after giving you this alert, I'm just going to go in and cancel it. So we don't know what alert is going to hit. We don't know what alert is going to hit until you get the alert that says it's time to go in. It's it's time. So do you understand why it's a very strategic approach to trading? Because it'll give me the opportunity to really find the stocks that I really like and the levels that I would like to buy them at or sell them at. And by the way, it works the same way to the downside. You see here, we gapped up right here. Let's just make an assumption that this was a bigger gap. Let's just pretend this was a good size gap like this to the upside. I would have entered right here to the short side. We would have made money. So it works the same way to the upside and the downside.
So you can trade opening gaps up as well as down.
Absolutely. Of course. Yeah. If I have a gap down, I'm going to, it's going to be a long signal. If I get a gap up,
buying calls. Yep.
And if I get a gap up, I'm going to be buying puts. But I'm always buying calls or puts. I'm not doing anything weird. I'm not buying any crazy it's just really straightforward. And by the way, for the record, if you guys have known me for the last 10, 12, 13 years, that's how I trade. I trade gaps this way. So it's a very A, B, C, D, E approach to trading gaps. It's very basic because look, let me show you. When this gap occurred, we knew right away, and this is according to the system, that if we broke above 108.46, we would have gotten long. We would have known that if it broke below 107.41, we would have exited. And we would have known that our profit target was right here at 122. Yeah, we're waiting for a confirmation. That's exactly what we're doing, Cyrus. And we didn't get a confirmation on Nike, but on Apple, we did get a confirmation right here.
Right.
We actually just took this trade and we made money on it in a different service that's not related to this service at all. It's a day trading service. It just happened to be that I like to trade. Nothing to do with it. And I was familiar with it because I remembered that I gave it to you guys as a free trade here. So I figured, why reinvent the wheel? Why not just go with, with something I'm comfortable with?
Sure. So Roger, this also explains why you can have, 3 or 4 or even more tickers as part of your hit list. You see that things are setting up. The entry is there. It just hasn't hit yet. Now, if one of them hits, do you cancel the other ones or do you keep them going? Usually? Okay.
Depends on, are they in a related sector? Are they related stocks? Do I still like the market the same way? Do I still like the sector the same way? It depends. I don't want to give you a clear, like if I had it on Marriott and Hilton, I would obviously cancel one, right?
Yeah.
If I had it on Applied Materials and Intel or Nvidia and Applied Materials, I would obviously cancel one. They're both chip stocks. But if one was in Arm and Hammer, CHD, and one was in Nvidia, I'd probably keep them. What's the downside? Consumer staples and chip stocks, they don't really have much of a core. So again, it just depends. It just depends. But it's this way, ahead of time, unless it's already in the gap. And sometimes I'll just send you an alert and say, hey guys, it already triggered, but I still like it. It's got plenty of upside. But it's easy to, I'm not saying it's easier than anything else, but it's just easy to execute. It's easy to execute because we see the trades coming, and they're like right now, like, okay, so you got it. Let's just say hypothetically we were long Apple and we wanted to wait for it to fill the gap. Okay, well, you're long. Here's your profit target, 192.44. We're just going to stay long there, and that's what we're going to do. And nice and simple. It's not nerve wracking. It's not like, all right, we got to do this, we got to do that, we got to do this, it's for people who have a life.
Right.
For people who, I don't have a life, but if you have a life, this is. I'm hoping that when my kids all get married and have kids, I'll have a life then. But it hasn't happened yet.
Hasn't happened yet.
My oldest is only 22, so I still have some time.
Well, the other thing that crosses my mind here too, for the folks that have lifetime and they take advantage of the scanner, and the scanner is a very powerful tool. Just combining the scanner with these, very basic and simple rules that you have that you explain in detail in the masterclass. Anybody should be able to pull up the scanner, see that there's a gap, and they can plot for themselves what the entry point should be, what the exit and the profit target is. And, and you can help them decide there's other factors as to whether or not this is really a high quality trade or not. The point is, it's all in the masterclass.
Right. Of course, it's all in the masterclass. Everything will be in the masterclass. I'm also going to give you guys some tips that I wasn't even planning on covering because I love doing this and I want you guys to succeed, like gaps and trend lines and filters. And as a matter of fact, I'm going to be working. Let me see when it is. Is it Monday or Tuesday? Hold on.
It's Tuesday, Roger. It's Tuesday, and it's at 2 p.m. Eastern time.
Perfect. I'll be able to prepare for it effectively over the weekend. Now I'm going to have something to look forward to this weekend. I'm going to be preparing for the class. And usually, if I say I'll do a half-hour class, it ends up being a 3-hour class. I like to teach. I really like to teach, and I like I like our folks to make money. We did our trade numbers yesterday, Raleigh. We've had 82 or 83 trades now in the pit and 4 losers. That's all we've had. So
it's unbelievable, Roger.
We're doing well, and I'm hope that I don't disappoint you in this program. I intend to bring everything I know and all of my shenanigans here with me and try to help you guys make some money. I'm very excited. I'm very, very excited. Now listen, folks, let's talk business. Let's talk brass tacks. 997. It's over tonight at midnight, and I'm going to issue a trade today. This is the time to rush, to hurry, to get in on it before you miss out. If you miss out, you're really going to miss out, and you're going to miss out big, in my opinion. This is a great program, and I really, really think it can help you take your trading to the next level. Remember, it's like that storybook. At midnight, that's it. It's over. It expires. Right. New traders, get in on it. It's a great way to learn. I promise you something. 20 years from now, God help us, we're all alive. 20 years from now, Robert, I don't have a free trade today. Today, I'm telling you guys that I'm closing it out. I gave you 4 free trades already, 4. And 3 of them are working out, by the way. Mm-hmm. But what I wanted to say was this, is that the tactics that you will learn by applying this program, you will never, ever replace. You will love these tactics. These are the tactics that professional traders begin with. And I've said this last couple of days. What did Kobe Bryant say? Don't be ashamed. Don't be ashamed to go back to the basics. The basics are there to help us. They're there to make sure we don't make stupid mistakes. We get catty with our trades. We think we know everything, and then we start gambling. Don't do that. No, Dave, they're not secret at all. I gave you them. Apple, Nike, Docs, DOCS, and the one I gave you yesterday.
PayX.
Say that again?
PayX.
Thank you. PayX, yes. That's the ones. Yeah, 4 trades, Dave. 4 trades. I gave them all yesterday, and 2 of them I was just talking about for like 15 minutes giving examples. So, folks, take advantage of this. You're absolutely going to love it. Next Tuesday, we're having our session. And I'm gearing up for it. I'm going to make a video. I'll put it in the members area, and you guys will be able to watch it whenever you choose to, okay? Raleigh, this was a fantastic session, as always.
Yes.
Folks, please, 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 don't delay. Take advantage. Go to rogerscott.com/gap. Take advantage of this opportunity. The market is red hot, and it's time for you to get in on it the right way. Trade with Uncle Roger. There's a lot of guys out there that do what I do, but I'm better than most of them. And that's the bottom line. I'm better than most of them. SJ had a question. What's the difference between this scanner, others like Data Miner, Quantum Indicator, Pro Trader? SJ, all right, I'll answer your question. It's a tough one. Data Miner looks at seasonality. Quantum Indicator looks at pullbacks. And Pro Trader is a shark that looks for day trading moves that happen immediately. Did I summarize that well?
I think you did. And this one's just looking for opening gaps.
And daily gaps, opening gaps and daily gaps.
And daily gaps.
And daily gaps. Yeah. Big daily gaps, medium gaps. So Data Miner is what we use to get trades for Stealth Search. It's a seasonality scanner. And we just upgraded it, by the way. Literally, like we just finished it. It just finished. Quantum is the best indicator if you want to trade pullbacks on the S&P. I dare anyone to find anything better than that for the S&P. And Pro Trader Dashboard is the coolest thing for very active traders. Pro Traders like the Ferrari for active traders. It's fast and people love it. And the feedback has been amazing. And now we have, to add to that, the gap to green, which I think is fantastic. Love it, love it, love it. All right, guys, have a great day. Raleigh, I'll give you the screen. Folks, you have a fantastic day. And if anything else comes up, please feel free to email me at roger@rogerscott.com. Thank you, Raleigh. I think Raleigh is stuck. I think he's stuck. Yeah, he's stuck, but I'm here. So let me go ahead and share my screen till we can get Raleigh back here. Screen 6. There you go. There you go, folks. Let me see if Raleigh's back or not. I think he's trying to log back in, or maybe he had power outage. I know that in Texas, they've had tons and tons of weather problems lately, and that might have plagued him. Let's see if Raleigh is. Nope, I guess not. But you guys should be able to see my screen, okay? All right, I'll leave it up here. If anybody's interested, please, please, please feel free to go to rogerscott.com/gap. It's expiring at midnight, and I'll leave this screen open. How can I become an assistant to Matt? Send us an email. Thanks, guys. Have a good day.